Well, welcome everybody to another Sunday sermon live with your hosts, Mr. Banks and No Risk, No Premium. We are not financial advisors. Anything taken on this call should not be taken as financial advice. Let's get started.
What is up, guys? No risk here. Well, beautiful week in the market last week. Basically we said, being up towards major resistance, and then we have the Fed coming in Friday, i.e. Powell, all about how he responds, the speech that he had and what he gave of what would probably happen next, right? And we saw what happened next. I mean, we got the devil's dick candle all the way down, right? But we'll get to that. First off, let's start. What should we expect this week? As far as any economic data coming out, right? Monday, nothing. Nice. Okay. Tuesday is interesting. Consumer confidence index. The only reason why I take a look at the consumer confidence index is because last time that was delayed data, meaning that was after market open. This is Eastern Standard Time here. So 10 a.m. would be 30 minutes post open. We had that. We saw some movement in it, right? Because it was a rather low number. So, you'll want to, Tuesday morning, you'll want to be cognizant that, if you are taking a trade within the first 30 minutes that, post 30 minutes, you could get a little bit of volatility. Okay. But I like to see the Case-Shiller home price index year over year. Obviously, you guys know once COVID hit and all that shit happened, rates were fucking non-existent. Everybody wanted to buy houses all of a sudden. Not enough supply to keep up. Housing prices rose like a fucking crazy bunkin' Bronco. Okay. Well, now it's time to return to reality. Rates are up. People are getting laid off. People don't have as much disposable income. People are not stimulated through the government. Okay. So what that means is, are we going to actually see a quote unquote correction or quote unquote downturn or just a bubble, anything, a restructuring of price to actual levels? Okay. So you'll want to see that number there. And then the job openings and quits are relevant, guys. And why are they relevant? Okay. Well, when Powell said two things that were very important on Sunday, Sunday, today is Sunday, on Friday, he said, first off, you're going to have pain. You're going to have pain. Okay. That was the first hawkish comment. Then he said, we have to remain data dependent, meaning what he has done and what the Fed has based their quote unquote toolbox and how they've executed, going from QE to QT has been one, inflation numbers, right? CPI, CPE, and then the jobs market. We've been hearing strong jobs market, this tight, unemployment low, whatever. Okay. Well, with his comments on Friday, and him saying there will be pain. Okay. What happens now is there is no pivot. Okay. Pain means things either stay the same or get worse, i.e. we're going to continue to hike rates. Okay. And when you continue to hike rates, if for those that don't know, a little Econ 101 background real quick, Spark Notes edition, raise rates, more expensive to borrow money. Those companies that do not have a ton of cash flow or great margins or cash on hands, that operating expenses are expensive, they have to slow down. They have to contract their expenditures. The easiest thing for you to do is cut what? Headcount. Why? Because it's fucking expensive to hire somebody and employ them. You pay them a salary, you pay them a wage, you pay for their benefits, you do contribute. Okay, you guys see what I'm saying here? It's fucking expensive to hire somebody and keep them employed with you. So what do they cut first? People. Okay. Easiest thing to do when you want to save top and bottom line, right? So anything that has to do with jobs and anything that has to do with the Fed tightening or raising rates more or CPI, CPE, you want to pay the F attention. Okay. So where? Quits and job openings. Boom. That's Tuesday. Right. We have an ADP employment report. Guys, if you guys don't know what ADP is, it's basically a payroll software. They are the largest in the country. Goddamn, almost everybody uses them. I used to use them. They give you some numbers so you can get an expect, because look, they're paying people. They know what numbers, how many people were on their payroll last month versus this month, last year versus this year, etc. Then we have Thursday. Okay. Thursday, jobless claims, continuing jobless claims. Then we have non-farm payroll, unemployment rate. How many days this week do we have something that has to do with employment? Bing bong, time to pay attention. Okay. That means for me, that means volatility probably comes back because we always see that pre-market movement, but it also means I'm likely not going to be swinging many positions overnight because to me, that's a gamble. We have no idea what the jobless claims, for example, will come in at. We have no idea what non-farm payrolls will come in at. And even if we did, we have zero fucking clue how the market reacts. It's not the data, it's the reaction. Okay. It's not the data, it's the reaction. Okay. Traders are reactors, not forecasters. Okay. Because if we were able to forecast everything, SPY would be at negative 10 fucking thousand. Because we have a shit for economy right now. If you just traded what the news was. Okay. But we're not. We get a high CPI print, right? We get all this shit that's bad, and we fucking have run from 380 to 430 in like 2 weeks. Okay. Bad news was good news. Right? That was a little saying we had. So stop trying to play what you think from an economic standpoint should happen and just play the chart in front of you. There's reason why economists are not traders because they be fucking broke. Okay. You want to play the reaction at the levels. Okay. If you start trying to predict, you will have a bias and it will chop you the fuck up. It's very simple. All right. So with that being said, obviously, guys, all of this data coming out this coming week, which will be great. And then what do we have going on this week? For earnings, I like, well, I think it's CrowdStrike right here. CrowdStrike, interesting gaming platform. I believe not too familiar with it, but what it does for me is more consumer sentiment. People spending money on games, are they not? Best Buy, are they buying shit? Are they buying shit at Best Buy? Okay, are consumers spending their money? Economic slowdown or the economy depends on us spending our dollars. Okay, keeps our economy growing. If we stop spending as consumers, we will contract as an economy. Okay, very simple stuff. ChargePoint, interesting to me. One, we saw a ton of ChargePoint flow. I've been telling you guys throughout the week about, and we know EV, solar, clean energy, all that garbage, not garbage, all that stuff that the government's pumping, right? The bills, this, whatever, that, etc. All come out this week. There's ChargePoint this week. I like ChargePoint, and I would think if I had a bias or a lean that it would majority be long. They've all been beaten down to shit since we shifted to a more QT focused Fed. Okay, so if they've been beaten to shit and now we have our government pumping life into them with government bills, grants, tax credits, all this kind of shit, I would think the outlook on their earnings would be a little more positive than it had been in the past. Okay, because you're not going to talk about something that could happen, right, for your company. Our government could pass this law that gives tax credits that helps our business. Okay. But when they do that, all of a sudden you turn around and say they are helping us. And this is what we project now. Okay. Bingo. Justin, any earnings plays or tickers on the earnings side that you like or see this week that you're looking at?
You hit it. I want to see Best Buy for the spending, see what their guidance is. HP is another good one. And then I'm trying to see. That's pretty much it for me. Chewy will probably be good as an IV play for sure.
Chewy would be good. Chewy's the dog.
ChargePoint as well.
They're the dog thing, right?
ChargePoint would be good. That's like they're supposed to be the leaders in EV charging, so it'll be interesting to see what they say.
If we're supposed to be, I mean, California specifically, that's where I'm located. There's
no gas cars.
No more gas cars sold by 2035. That means anything in California needs to be electric. And so with that being said, well, where the fuck, gas stations are gonna be probably installing some charging stations there. And you bet your ass they're gonna take a cut of it because they already own the land. Okay. Yep. So now does energy prices get more expensive to charge your car because you're also paying a cut to the person that's letting you be on their land? I don't know, maybe just a thought. Okay, but with that being said, if we know ChargePoint is one of the leaders in charging stations in the entire United States, and all these states and our federal government as a whole is changing to this renewable energy, clean energy, EVs, et cetera, then we can think that the company that's the leader now will likely be the leader then. Okay. So I agree with you, Justin. Good stuff. But the Chewy, this one's, I think it's CHWY.
CHWY, yeah.
Is that the dog fucking
It
thing?
is.
That'll be a good one to
pets,
see
yeah.
consumer sentiment, because I think it does well, because even when you're in a recession, you're not going to not feed your fucking dog. Right? Like, right? That's just like cruel and inhumane. So keep your eye on those stonkies for this week. Also, guys, check out our admin, JT Gladiator. His name's Dan, great guy. Honestly has built a strategy around earnings, playing the IV pump on earnings. If you guys don't know what IV is, then www.google.com, search implied volatility and options pricing contracts, and then bada bing, bada boom. Okay. But you got to know anytime before there is a major event catalyst, right? Or earnings, the IV gets juiced, meaning it increases in significantly increases. If it increases significantly, then what else increases significantly as well? The price of the contract. So you could play earnings by not gambling, but just playing the IV pump on it. He does a great job. I guarantee he has either homework this week that'll come out in our homework channel, and he'll be in the small accounts channel, or the ER channel. We consolidated those, didn't we, Justin? He'll be in the small accounts channel.
Small accounts, yeah.
Playing those. Okay. So take a peek in there if you want to learn a little bit of how to do those. Now, on to the charts. Okay. On to the charts. Very nice looking devil's dick out of fucking hell candle down right here, right? So I want to just address something really quick. Okay. I just want to address something. Friday morning. Okay. We had puts. We had calls here. You crushed. We knew 410 could be coming. Okay. We knew it could be coming. At the beginning of the day, if anybody said, yo, we're going to 405 tomorrow, no matter what. Okay. Nobody knew that for sure. Nothing is for sure in this market. Okay. So I want to address a lot of the emotions I saw in the chat of people saying, oh my God, I left this on the table. Oh my God, I should have held. Oh, that is called shoulda, woulda, coulda. And that needs to get the fuck out of your vocabulary right fucking now. Okay. You shoulda, coulda, woulda done anything every day in the past in the market and been a goddamn gazilli fucking in air. Okay. It does not matter after you exit a position what the fucking stock does. Okay. Because you know why? Because now, I guarantee now, tomorrow and this week, people are going to go from locking in profits, being disciplined, trading level to level, and they're going to go, well, fuck, we're down 3.5% Friday. If we break through this level, oh my God, I can make this much money on this contract. I could have this much percent. I could. Okay. Or you could just take profits and shut the fuck up. Okay. And I'm being dead ass fucking serious. I do not want to see shoulda, coulda, woulda. It does not fucking matter. I promise, because it will fuck up your mindset. Because you know what's going to happen now? Okay. What's going to happen now is this. Hopefully it doesn't happen in our group, but it's going to happen to a lot of people. The market does two things. It trends and it consolidates. It consolidates and it trends. It consolidates and then, I'm sorry. It consolidates, it trends, and then it consolidates and it trends. It consolidates and it trends. And it consolidates and then it trends. Okay. If you do not know which part of the cycle we are in, you will get absolutely obliterated. So if you think for any second after a 3.5% down day that we're going to have another 3.5% down day tomorrow, probably unlikely. Okay. It could happen. Anything could fucking happen. All right. You need to trade level to level, right? Level to level was if we reject I said on the Thursday night 2-minute drill, 421.22. Didn't I say that? 421.22. 421.22, 421.22. Didn't I say that? Where the fuck did we get to? I say go short there. So if you went short there, you knew the next level down was where? 415. Very simple. If you went short, you took profits there. Okay. You took profits there. Now we melted down to our next level, 412. Then we melted down to 410. If you would have traded level to level, you would have been fine. You would have seen, right? You would have seen after we melted through 415. Okay, we didn't get back through 415. Bounce 412. Didn't get through 412. We're going back down. I could take puts there because we failed that level. Okay. But if you think buying up here and holding your core position all the way down to here was smart, I disagree with you. Okay. I disagree wholeheartedly. No matter what, the market is designed to take your fucking lunch every day. Okay. Designed to take your lunch every day. So why not smash and grab its fucking lunch? Right? 421 fails. We ride puts down to 415. Sell out. Done. I'm fucking done. I'm done. Then you watch the remainder of the levels. But I don't give a fuck what happens the rest of the day. Really? I don't give a fuck. You know why? Because now we've had a trend day. We've had a very nice trend day out of consolidation. Okay. Consolidation was between 410, right? And this 417, 420, whatever you want to call it. Now we've had a nice big trend down day, and we might even fall a little bit further, but I guarantee we get a bounce. And those people that held on because they shoulda, coulda, woulda, and I want to show my friends this sick ass profit and this sick ass percentage, and they're going to get fucking wrecked. Just trade level to level. Okay. That's it. If you want to have some runners, you should probably only have some runners if they have time on the contracts. And we are definitely at a top or bottom. And we understand that we are coming out of consolidation and moving into trend. Okay. That needed to be said. Justin, you can make your comments on that if you like, but goddamn it, I had to say that.
No, that's good. I mean, you hit it right on the money. We can't switch up our trading styles because of one day or how the market reacts.
Yep.
I mean, you're going to create FOMO. You're going to do this. And you're right. I did see that in the chat. Oh, I saw people say, oh, I hit 150%. I hit like 200%. And they were still upset.
Who gives a fuck?
That's not it. Like you just hit 150%. Like what the fuck?
BK and I hit power reaction. Blop down 415. The moment I saw it pop back up, BK goes, I'm in calls. I said, me too. Bottom at 6. 3 minutes later, they were at 16. Sold. I fucking stepped away from my computer. I couldn't give a goddamn shit what happened after that. Okay. I also had to step away to go to some meetings and had some things I had to do on Friday. But you know damn well I checked the market the whole time and what was happening. And we were just melting through levels. Great. Did I fucking try to force something? Did I try to be greedy and get back? No. Hit your goal, especially on a Friday. Get the fuck out, dude. We trade so we don't have to watch every fucking tick all day long. And yeah, I see everybody in the group like, oh, go in here, taking this, look at this, da 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 da. I'm like, bro, the big move happened. If you missed it, that's okay. Because you know why that's okay? Even if you completely missed Friday, like completely missed it. Even if, guess fucking what? The market opens the same fucking time on Monday. And I guarantee you'll have the opportunity to make another trade. Okay? So take that as you will. Because you guys all needed to hear it. I needed to hear myself say it. I needed Justin to hear me say it. I needed everybody to fucking hear it. Okay. I needed everybody to hear it.
Yeah, you should not be conditioning yourselves that 100% win is a bad thing. So now you're conditioning yourselves that winning is bad. And that's what you're putting into your mind. So guess what's going to happen from there? You're going to start losing your money. Guaranteed.
Because you're being greedy with profits. I say be greedy with profits. I mean, you fucking sell when you have locked in green. Okay. There is no worse feeling, okay, emotionally than being up on a trade significantly and letting it go red because you were a greedy fuck. And then you let it go red and you keep on holding on because you're like, it could bounce. I hope this bounce. You will not make it. You will not make it. I can tell you right now. Okay.
And then one thing,
Go ahead, Justin.
just one thing I really want to add real quick is like, if you really want to get these high percentages, you're not having your full position reaching 200, 300, 400%. Like those are runners.
Zero chance.
Runners that get there.
Okay.
And when
we leave off Twitter, get the fuck off Twitter. Okay.
So guys, the thing about runners is that when we leave runners, we leave them because we have a trade plan and a level that we expect it to go.
Mm-hmm.
So once we secure our profits first, we leave those runners because we see the market could potentially go hit that level.
Mm-hmm.
You guys are just leaving runners just in hope that it goes
with the full position on.
Yeah. So when you get down to runners are for, I have a trade plan. I took my profits, but I have a trade plan and I want to see if this runner can go hit that level that I'm looking at. You have to have the exit. You have to have that level. It's not just leave runners just for shits and giggles. It's I leave runner because I expect it to hit this level today.
Your trade plan should have an entry opportunity or an entry plan, meaning if this level holds for calls, we take calls. Okay. And the trade plan could be this. It couldn't even be level to level. You could say, if I get 10%, I fucking sell. I get 10%, I sell. S&P returns 8 to 12% annually, and you're going to get 10% that fucking day? By all means. Nobody account is the same. Nobody has the exact same risk tolerance, okay? Nobody has the same profile as anybody else, okay? BK slaps with 20,000 to get 10% is 2K, okay? Justin I might slap with 5 to get 40%. Dan might do this. Somebody else may do that. Someone in the group may only need 10% because they're just trying to pay their fucking electricity bill this month.
Savage tries to go for 5%,
Savage goes for 5%, dude. So when someone is like, is this good? Is it? No. And I'll always respond, whatever your trade plan tells you is the answer. And if you don't have the answer, meaning you do not have the trade plan, then you absolutely 100 fucking % have no business being anywhere close to being in that trade. Okay. If you follow people, you will get whacked. This is no longer 2020. This is no longer buy the fucking dip. I mean, look, COVID, buy the dip. I mean, for 2 years almost, buy the dip, buy the dip, buy the dip. I mean, a fucking monkey could have traded this goddamn market. Okay. Now we have real trading. Okay. You have ranges. Not every week is a fucking breakout week. I mean, just really look at this. Every week almost saw a new fucking high. Okay, you guys realize that every week out of COVID, all the way up here, almost saw a new high. That's insane. We're not in that market anymore. Okay, we are not in that market anymore. Now, as far as why 405 got clipped, okay, it's pretty simple. Okay, obviously we saw what? We had this trend line off the all-time highs. Okay, really simple. We saw it failed at once, went right back up there. This happened to be on the weekly chart. What? The 50 MA, this purple dot at 432. We got to 431.73. Perfect. Few cents off. Fucking shoot me. Okay. What else did we see was there? 200 MA daily. Bing bong. That's a short opportunity. We said that was a short opportunity. We failed off that level. Perfect. But where we ended up Friday, go figure. You want to talk about MAs? MAs are magnets. If you break through one, you're likely going to the other. Well, we broke through. rejected one, broke through a few others, and went to where? I mean, realistically, on Friday, this was here, right? This was here, 405. Where do we close? 405. Go figure. Okay, go figure. And those of you fib heads, I love you guys. Fibonacci retracement, right? Let's just take a peek here. Let's take a peek. Recent low to recent high, what happened? Okay, what happened? Recent low, boom. Recent high, bing bong. What level did we retrace? You see this 38.2? Okay, 38.2. 405.16 is over here in the blue. You might be able to see it right there. 405.16 right there. Okay, what's the low? 405.25, 9 cents off. Literally, go fuck yourself. Okay. Also, we have the 100-day on the daily here. Okay, and we have the weekly chart. Okay, give us the 20-day. I mean, it was right there. So we knew it could have got down there. Now, what to expect for this week? Well, if you're down 3.5%, you're going to get a bounce, right? At some point. I would be looking at where? Well, right now we're at the 38.5 retracement. Okay. Where could we get to? 50% retracement, 396. Daily 50 MA is where? 398. Do you think we dip into that area? More than likely. Okay, more than likely we dip into that area. So 398, 395 to 398, huge, huge, huge level of interest to take a bounce trade long. So we will definitely be watching 395 to 398. I mean, really call it 396 then, because it's 395.95. All right, cool. I would look for this week, especially Monday, Tuesday, Wednesday, I would be looking for a bounce there. Most definitely 100%. Okay. And if we bounced up, where we could get to, first level I think we could get to would be where we broke down from. Okay. We broke down from last week, 410, 411. That's where we broke down from. Okay. And this old range we used to be in, okay, was 406, right? So as long as we get above that, it's likely we get back in this range and hop back up here. So I'd be looking at 410 to 412. At those levels, I want to see the reaction and maybe have an opportunity to get short there. Okay, to get short there. Now, if we want to, not consolidate, because look, what did we just do, guys? The market either what? Trends or what? Consolidates. Okay. It either trends or consolidates. This is a trend. I'm sorry. This is a consolidation. This is a trend. So maybe one more candle down 400. Psych level 398.50 right here. Get everybody to go short. Market makers already Google searching what fucking Lamborghini they're about to buy, what fucking private school they're going to send their 16-year-old to. Okay. And then they bounce that shit up because everybody's like, oh my God, we're going to fucking crater. The pain trade is always the opposite way. And when you go into consolidation, you take calls off support and you take puts off resistance. Simple. It's really simple. Okay. And it always takes a few touches. Okay. Before you actually break through a level. It took 1, 2, 3, 4th touch got us through because we ate up the demand at that level every single time. Okay. So now that you guys know that, we had a 3.5% down day Friday. We could get a little bit of trend continuation off on Monday, but do you think it'd be smart to see where do we finally bounce? And if you're just patient and think, where do we finally bounce, and wait for that level to come to fruition and show you where the bottom is, then you can get long off that level. The best R&R is there, but you got to be patient. You have to let the market show you where it's going. Okay. You have to let the market show you where it's going. So for this coming week, I'm looking at obviously 405, really decent level, 400 psych level, 398. Let's see where the daily 50 opens. It could open a tick and a half higher and it's right at 400. Bing bong, that would make sense. 400 psych level was resistance here. See that? Then we trend, or I'm sorry, then we consolidated here, and then we went ripper fucking Magoo through that level. So do we retest that former breakout area? More than likely we do. Okay, so I would say, fuck it. Let's say just 390, 398 to 400. Okay, we'll see if we get there overnight when the futures open up in 19 minutes. Okay, 398 to 400. I am looking at underneath there is 390, then 384. You guys see why I see that, right? Under 400, 390, and then 384. Okay, really, really simple stuff, guys. All right, upside. If so, if we want, if we want to have the upside, I mean, it could very well happen. Okay, I'd be looking 405, then I'd look 410, 412, 415, 420, same levels as last week to the upside. Okay, now that's it, guys. That's real simple. Really simple how to chart this thing out. Look at the homework channel. I put a chart in there. I put the weight sector of the S&P in there as well. Everybody should know that. Okay. Justin, that's it for me, brother. I am done screaming at you guys. Hope you guys enjoyed that. Everybody needed that, whether you made money on Friday or not. And Justin, you fucking last comments, take it away.
Last
dude.
thing I want to say is that, we have good days and we have our bad days, in life and in trading. But just know when you're performing at your highest, you are no different person than when you lose.
Yes.
You are
You
no different
cannot
person.
let your confidence, your strategy get shot behind the woodshed because you lost one fucking trade. We're all going to lose a trade. Steph Curry misses fucking threes. Whoever you want to talk about, the best hitter in baseball right now, I think it's Freddie Freeman. He's going to strike out, hit outs, whatever. Nobody's perfect. Okay. But you keep your losses small. You stick to the fucking script. Okay. And you do less and you make more. I promise, if you're patient and wait for the levels, you will make money. But if you are impatient, you blow your load, you overtrade, you don't stick to a strategy, and you're just looking for a handout for someone to call some shit out to you, you're done. Okay. I'll send you my Venmo. Send me the money that you're going to put on trades because it'll do better in my pocket than the market maker's pocket. Okay. It's that simple. Okay. Lizard says this: greed leads to overtrading, and overtrading leads to zero. Okay.
I think we should end on that.
We can end it right there. Thank you, Lizard. Shout out, Lizard.
King.
Shout out the script, guys. Check it out. I'm pretty sure you probably posted
an
a link
announcements.
in there. In
Yeah, we got it in
announcement. Script is live, he says. Check it out. Check it out. Check it out. It is fucking legit, I must admit. Okay. It'll help you out as a trader to understand volume and moving averages with directional movement in the market. Okay.
Risk management.
Risk management 101. It's not how much money you make, it's how much money you keep. Eric J. We'll end on this one. I like this one. The best traders are more concerned with how much they can lose on a trade if they are wrong instead of how much they can make if they are right. Bingity, bingity, fucking bong. Good shit, Eric. Appreciate you guys. That's it. Risky out, banks out. Catch y'all in the pre-market. Peace.